What's going on, guys? I'm a relatively new trader, and I'm basically just showing what is working out for me and my progress going along so far. Now, I'm not saying any of this is groundbreaking. I'm simply showing you this is what's working for me. This is not investment advice. Don't take advice from people on the internet, blah, 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 blah. And especially don't sue me if it doesn't work out for you. Now, let's get started. I, so for those of you who don't know, real quick, I bought a Uber put option. Basically, I need the stock price to go below this number here of $23 and a half, $23.50. So now, a put contract basically means that you want the stock price to go down. I'm not going to get super deep and heavy into it. There's a lot of videos out there that'll explain these in greater detail, what a put contract is. If you do know what a put contract is, I am going to just lay this out here and show you how I am using put contracts to take advantage of when the market goes up and down. So let's get started. So if you go to TradingView, that one here, TradingView, you can have these little tools called a relative strength index. Basically, this is showing you how the market is fluctuating, if it's overbought or oversold. So you see this purple line here around the 30 mark. You see 30 off to the right here. Anytime the stock dips below 30, it is considered oversold, and then usually the market or algorithms will react and will shoot the price back up. Now, when you look down here, you see when the price here went down, let's zoom in here. When the price went down here, it lines up perfectly with this here. So every time the market oversells this stock here, it dips below 30. And then when it goes above 30 here, the stock price goes up. What does this mean for you? Well, so let's see here. If you look back over here, you'll see that I made this put option here at 10:04 today on Friday. So at 10:04, right about here, let's zoom in a little bit more. Sorry if it's throwing off, but see here, I see that the stock here went way above the 70 mark. So this means it was overbought. The price shot up too fast, kind of thing. People were getting crazy with their algorithms or their investing habits or whatever you want to call it. And the price jumped way too high relative to what it normally does. So there's a natural pullback. The market always corrects itself. So I bought a put option for 23 and a half here. And if you look right over here at 23.80 is where the stock was currently at. So I bought an option saying that once the stock goes below $23.50, I'm considered in the money. So my stock or my put option will be worth more than. And then here we are. We currently sit at $21.16 today. This is really unique because you can basically just watch these graphs. You see that when it's oversold, right here at 20, this is pretty oversold here. People were selling this stock like crazy. That once it goes back up, so here the price had dropped down to $21 and it jumped up to $22 here. You get to see that the stock really fluctuates quite a bit here. So basically, just buy a call for $21.50, say here, and then let the price go up to $22, quick sell, get your quick 10% or so. Now here, this is kind of working for me in my benefit. If you really believe your numbers and so on here, you can just buy a put option every time it's overbought, and then buy a call option every time it's way oversold. And then you just ride the market. So right here, you'd buy a call, let it go up. Right up here, since it's overbought, you would buy a put option and ride it on the way down, sell it down here. Now, you're really going to make a ton of money the more money you have. You know, what a concept, the rich get richer. You need to have more money that you're willing to risk, but keep in mind that this is not investment advice. There are cases where the stock doesn't plummet. So like here, like this was a big, you get to see where this number here and this number here have a pretty similar drastic drop. So $23 down to $22, that's a full dollar here. Then you have $21 down to $20, so you got another full dollar drop here. So when you see these bigger overbought spikes here, you'll have more significant price drops. But then you get these little price drops, you're going to see that the market doesn't quite collapse so much. So you kind of got to be ready to get out of these options in a time span of really minutes. It doesn't drop a whole lot from here to here. I mean, I don't know how much the call option or the put option is going to drop, debating on that. And there certainly are cases where you do see that this is a pretty big spike here, and it doesn't really drop. Sometimes the market will drop here, but then it's fighting to kind of stay in that overbought territory. But then eventually it does fall down. So I mean, we're talking a span of, look here, 338. So that's 138 to 238. You could be sitting on this for an hour, and you won't see the price drop. And you get, I guess for me, what I'd be looking for is look for these huge spikes in the oversold category and buy a call and let it ride up. So here went from 1368 to 15 basically here. Now, I'm not saying this will work 100% of the time. I mean, with the government intervening in the market all the time, that's going to throw it off. So you can have price changes come about just because of what the president said, or what the Treasury Secretary said, or what the jobs report is going to be next week, or what the CEO says about if they have enough cash or not. So really, really do your research. Be ready to hit sell. Set some sort of a limit on your calls and puts and stocks and everything. But you could buy stocks based on this. You could buy call options, which is what I'm doing. I'm buying put options also, and something to consider. If you like this, if you have questions or comments, or if there's more information I should be getting into, or if you have any thoughts, how did this work out for you? Are there any other indicators you use to help you decide on when to buy, when to sell? Please let me know. I'm relatively new at day trading. I do not take my advice. Do not buy stocks simply based off of this, and more importantly, don't sue me. So, with that being said, have a good one, guys, and stay sane.